Okay, now we get into the market review. I think I already mentioned to you, our expert is Mr. Jom Jacob. He's a specialist on the natural rubber market, and he got extensive experience, more than 35 years experience, not only in India, globally. He got full of knowledge. I invite him to come forward to share about changes, developments in the natural rubber market. Mr. Jom Jacob, please.
Thank you, Mr. Peram, and also the TechnoBiz group for this wonderful program. And NewsHour is it's a very good, innovative program. In fact, actually, it's a need of the hour because we don't get enough time to go through the various magazines and newspapers, so we can get everything of 1 week in a nutshell. So he's serving the whole ocean in one glass of water. That's the beauty of this program. Thank you very much. Hi everyone listening to me from different parts of the world and also at different time zones. I'm joining you live from my hometown in the Kerala state of India. So in the next 5 minutes, I'll be giving a brief overview of the natural rubber market, what is the current situation and what can be expected in the short term. So coming to the natural rubber futures, the 3 major futures exchanges in Asia made gains in the last week compared to the 1 week before. For example, in the case of Shanghai markets, the May contract, which is the most active one, averaged 1.2% higher during the last week compared to the week before. And SICOM TSR20 averaged 2.5% higher during last week compared to a week before. And in the case of Osaka, RSS3 June expiry contract averaged 1.1% higher. So in all the 3 Asian major rubber futures, last week actually rubber prices gained about 1 to 2%. And the case of SICOM, it was 2.5%. And in the key physical futures, physical market, in the key physical market, not futures, physical market, STR20 in Bangkok averaged 2.8% higher, 2.8% higher last week compared to the previous week. SMR20 Kuala Lumpur averaged 2.0% higher compared to the previous week. And RSS3 in Bangkok averaged 1.2% higher compared to the previous week. But when we come to the RSS market in India, which is which is one of the main RSS market in the world, in fact, actually, Indian price came down, and it was averaged during last week was 2.2% lower compared to the previous average. This is because of the increased supply in the domestic markets because of the favorable climates, and also at the other side, demand side, actually, tire companies were less active during the week. So Indian price came down. This is a sharp contrast to the trends in other parts of the world. Indian price averaged 2.2% lower during last week. And coming to the latex market, Bangkok latex averaged 3.4% higher, Bangkok markets. But in sharp contrast to the Bangkok market, Kuala Lumpur markets averaged 1.8% lower. So why Kuala Lumpur market came down? We have 2 reasons. One, Malaysian ringgit sharply depreciated. It is on a depreciation trends for the last few weeks. That could be one reason. Another reason, the week before actually the latex price had increased substantially. So the previous week fall could be a correction from the high rates attained in the previous week. So these are the major developments in the markets in terms of the changes in price. And what were the factors behind the price trends? So coming to the demand supply situation, last week actually the demand supply situation globally was almost balanced. There was no short supply. We haven't heard any shortage of supply, and also there is no excess supply. Almost a balanced demand supply situation. This was something noticed last week. And beyond supply and demand, there are factors influencing rubber prices. So we generally put them with the term non-fundamentals, which is not directly related to supply and demand, but there are other factors which may be having indirect implications on natural rubber supply and demand. First one is actually COVID-19 surge and reintroduction of reintroduction of the control measures in a number of Chinese provinces raised the concern about the recovery momentum of the Chinese economy. Chinese economy is very important for rubber because around 43% of the global demand for natural rubber is coming from China. So whatever happening in China is crucial for natural rubber market. So this is one thing. Actually, while other countries are not giving strict restrictions and control measures, China is different. China is putting strict control measures and movement restriction. And in some of the provinces, people were not allowed to leave the house also. This is a situation. So this is one important development which has influenced the market sentiment during last week. And other thing, World Bank has scaled down its outlook on the world economy for 2022, and at the same time IMF is likely to come out with a trimmed world economic outlook for this 2022. So 23rd of this month IMF is supposed to release their revised outlook for 2022. So already there are indications that IMF is likely to trim the global economic outlook. So these negative news have influenced the investments, actually influenced investor decisions in the futures exchanges, and whatever happened in the futures exchange have influenced the physical market also. Another major development was actually the US Federal Reserve is actually in the process of tightening in policies. Tightening policies mean another term which is commonly used is shifting from dovish policy to hawkish policies. Means the policies are going to tighten. At the end of this month, the US Federal Reserve is going to have another meeting. In that meeting, Federal Reserve is likely to go for sooner and faster policy tightening. So this is actually this IMF, US Federal Reserve is going for a hawkish policy. That news is actually dominating market sentiment. What is the implication means interest rates are going to be higher and the dollar is going to be stronger. So interest rate is likely to be higher means borrowing cost is going to be or cheap money is going to be more expensive, or borrowing cost is going to be higher, and the dollar is stronger means investors in the commodity markets will be investments in commodity markets will be less attractive once the dollar is stronger. So a stronger dollar and higher interest rate both are factors dissuading investors from the speculative market. So, and also high inflation is another factor. So we had a balanced demand supply situation last week. At the same time, a set of factors which influenced the sentiment in the market. This was the summary of the market last week. Looking ahead, world supply of natural rubber is entering into a period of low supply, coinciding with the wintering of rubber trees. Wintering has some parts of the world. Winter means the leaf are actually shedding. Rubber trees are shedding leaves, and the fresh young leaves are coming. So wintering season usually start by the end of January or the first half of February. So at the moment, market has a feeling that world supply is going to enter into a seasonal short supply season. So this will have some positive influence on the market in the short term. Maybe next 2 or 3 months, world supply will be lower because of the seasonal shortage arising from the wintering of rubber trees. And during the wintering season, what happened? The lattice processing factories, they will have difficulty in sourcing the raw material. So what they do, they will encourage farmers to sell the produce in the form of fresh lattice rather than selling the produce in the form of kapila. So what they do to encourage farmers to do so, they will be offering a premium price during this particular season. So this is very common, especially in the case of among the Malaysian rubber lattice processing factories. So that means a short term, the seasonal shortage will be more advantageous to the lattice market rather compared to other forms of natural rubber. Then at the same time, we have to consider that the demand side. There's one important factor. China is entering into a nearly 7 to 10 days long holiday coinciding with the Lunar New Year, which is on 1st of February. So from the first week of February, almost all manufacturing activities in China will be closed down, and the market will be a dull market because there won't be any buyers from China during that particular week. So this is short term what is going to happen for the supply and demand. And as I mentioned earlier, in the short term, we will be expecting the dollar gaining further strength, because US Federal Reserve is going to have a meeting at the end of this month. Usually ahead of the meeting, the speculative traders in the foreign exchange, forex traders will be anticipating and betting on the potential outcome of the meeting. So from now onwards, we will be having for the next 2-3 months, dollar may be strengthening, and a stronger dollar is not good for commodity market in general, and natural rubber is no exception. Looking into the crude oil market, in the first half of January, crude oil prices increased 12% from $77 to $86 per kilogram per barrel in the last 15 days. It's a 12% increase in 15 days is something abnormal. And according to forecasts, crude oil prices are likely to stay high. In fact, actually, efforts made by US and China to cool the oil market by releasing reserve stock also could not find any positive impacts. That means oil prices are going to increase further. It's already at $86. According to one particular forecast, oil price can reach in the short term up to $100. But this is not only one particular group, not widely reported by, widely anticipated by other agencies. So that means anyway, we are expecting a further rise in crude oil prices. Always when oil price goes up, rubber normally gets a support. And that what we have, we are foreseeing right now. We have a mix of factors. We have negative factors, seasonal shortage, oil price going up. At the same time, we have positive factors, seasonal shortage in supply, and also higher oil price. At the same time, we are anticipating some of the negative factors also. Negative factors like a stronger dollar and long holiday in China. So we have a mix of positive and negative factors. When we have a mix of positive and negative factors, speculative investors in the commodity futures market will be they are unable to take a strong decision. They will be almost indecisive. Indecisive means they will be buying or selling. They are unable to take long-term position. So we can expect something kind of either an erratic movement of rubber prices in the futures markets, or some kind of a sideways movements, because we can't expect a upward trends, a strong upward trends or a downward trend in the short term. This is what we can expect from the market in the short term. Thank you very much. Thank you for this opportunity. Thank you.